Hello, it is Evan here from thetraderisk.com, and we've got a fun topic in today's video. It is how to trade meme stocks. Now, this is a very charged topic nowadays. You've got two camps that are sort of totally at sort of odds with one another. You've got, let's call it, traders that have been in the markets for 3 to 5 years or longer. They've been working on a trading process, technicals, fundamentals, or otherwise, it doesn't really matter. And they look at meme stock trading as straight up gambling or a total fad, or just generally being very dismissive of the whole concept. And then you have the other camp of new traders. Generally speaking, they are new traders sort of entering the markets for the first time, and they are trading these types of stocks, these meme stocks, and it makes all the sense in the world to them. They're having fun, they're making money because this is a trade that has been working, and they're looking at the old traders thinking that they're just that. They are old, and this is sort of the new paradigm, the new way to sort of trade markets. Now, I wanted to do a video on this because I think both sides are sort of right in their own way. I do think meme stocks, generally speaking, are going to be here for a while. This type of trading, or this sort of viral approach to investing and collaborating and pushing this narrative, I think is going to be here. And if you're an older trader, or if you're an existing trader that has been trading for a long time, I think it's something that we have to adapt to or understand, because there is money to be made. If we're thinking about it purely from, you know, the financial side of things, then there is absolutely money to be made in these types of names. And I want to sort of talk about that in this video. And then if you are a new trader, then and you are sort of attacking this from the meme stock approach, I think there's a lot of things to think about from the trading approach to it, to sort of do it more sustainably, to do it responsibly, and to sort of, you know, educate yourself on how to, you know, attack the market a little bit more responsibly. And so I have some tips and some ways to sort of approach that if you are on the new side. And I've got some personal anecdotes of traders and traders of traders that have reached out and been back and forth on sort of both sides of this, and I've seen it sort of firsthand on the psychology on both of it. And I do think that there is just things to be learned, and this is sort of why I wanted to just fire up the camera and go through a few different tabs to talk about this and to hopefully shed some light on both sides. So hopefully that sounds good. If you are brand new to our channel, if you're catching this for the first time, never seen The Trade Risk or myself, thanks for tuning in and being here. We do lots of trading education just like this, so be sure to subscribe to our channel. We've got a podcast all for trader education. We do market analysis videos every week, trade ideas, all kinds of good stuff. So hit that subscribe button and check us out at thetraderisk.com. So first things first, let's put a definition to meme stocks and try and get on the same page, and then we'll start to dig into more specifics. So I've got thebalance.com, and they have a good one-sentence definition here. So what is a meme stock? A meme stock is a stock that has gone viral online, drawing the attention of retail investors. So most, you know, high profile sort of story has been GameStop. I think we're probably all familiar with GameStop, the massive run up that it's seen, the extreme sort of, you know, rally in valuation between that stock at the start of 2021. That has been the spotlight sort of meme stock. We also had AMC, which is currently in motion right now at the time of recording this. We had BlackBerry, we had lots of other names. We're going to look at a few of them later on in this video, but that is sort of what we're talking about with meme stocks. And if we ask ourselves, you know, where are they coming from, or where are traders finding this? It is mostly from a subreddit called Wall Street Bets. This is at least where everything originated from. It is sort of spread out since, but this is Wall Street Bets. There's over 10 million people now that are subscribed to this subreddit, which is crazy growth because this has been around since 2012. And this was a very niche little subreddit where, you know, there was always lots of sort of speculation going on here, but this really exploded in popularity over the past 18 months or so. And with 10 million people following it now, this is not just, not just retail traders. I mean, this has captured the attention of the world now. And you've got to imagine there are even larger players that are now watching this subreddit to see what's going on here in terms of activity, trade ideas, and what people are sort of focused on. It is that big of sort of a news outlet now, or a social outlet to follow. So Wall Street Bets is really where everything kicked off. Discord has actually gotten really popular as well. So if you're not familiar with Discord, it's basically a social channel where you have channels, you have groups, basically you collaborate. And this is, I think, started originally with gamers and sort of connecting to talk over the mic and to hang out for, different games online. But this is really spread now into the finance side of things. And there are lots of trading chats and groups and sort of social, happenings going on here. So I know Discord is very popular, and there's so many other places that all of this sort of new social meme stock trading is happening. Now, I think what's interesting, though, is that, getting together to talk about trade ideas is not anything new. We've seen this for decades, basically. I mean, going all the way back to old school investment clubs that you could form with basically anybody to talk about stocks, to pitch ideas, and to invest together. This has been going on forever. You could take it to the early days of the internet, the Yahoo Messenger boards or AOL groups. This all existed back then, but I think what's sort of different now is technology has just gotten better and connected a lot more people. So things like Wall Street Bets and Discord, this certainly helps just spread the word so much faster. And frankly, in the year 2020, 2021, there are just so many people connected online now. It is an easier place to transfer ideas. I also think the COVID sort of crisis, lockdown, everybody's home, essentially, not working or working online. And that has also forced people to sort of collaborate online, to look for things to do online. And I think that is one of the ways, or one of the frameworks, I think, especially for the older traders that and older in age and just older traders need to understand, is that the younger crowd is looking at this as a social sort of fun aspect, right? So obviously there is great reward and risk tied to trading and investing, but I do think, and I've seen it firsthand actually, and talked with people firsthand, that this is fun for them to sort of hang out online, after class, and basically, invest and watch the markets together, to do it with friends, right? To do it with my, 3 best friends all said we should invest in this, so we're all doing it together. That is sort of the framing that is going on here. And because now we have such easy access to things like options contracts and all of this other stuff that ties into leverage and different ways to put on trades, you're getting some really outsized moves. And I don't want to turn this into a very, very technical talk and talk about market structure, options, and all that stuff. But this is sort of the framework, right? This is sort of laying the landscape of where we are, why this is important, why this matters, is because we have a new generation that is coming in, enjoying this type of style of investing, and this is the places that they're doing it on. So let's look at a few other sites that have popped up in the meantime. We have things like memestocks.org, right? This is one small example. There's so many services now, or websites that are tracking these types of statistics. So basically, this is a website that's crawling Wall Street Bets, and it is looking at the number of times some of these stocks are being mentioned. And so you've got to believe that there are some algorithms now, especially by more sophisticated players, that are watching the mentions on these stocks, and they are trying to get in front of movement. They are trying to track sort of the chatter. And again, this has captured the attention of the world now on watching these stocks and looking to profit and find opportunity. So this is no longer just a, small retail sort of hang out, let's talk about stocks and trade. Now this has moved on to something much bigger that people are very much paying attention to. This is why I think meme stock trading should not be dismissed. And, you know, again, goes back to why we're sort of doing this video. So I want to spend now some time, if you are a new trader, I want to think about the new trader that is coming in, sort of trading these types of names, the AMCs, the GameStops, BlackBerry, all that good stuff. I want to talk about how we can do it maybe a little more responsibly, to put on our trading hat. So the one thing that I dislike and disagree with 100% about meme stock trading is, if we look at pictures like this, right? This is what you'll find all over Wall Street Bets, which is people posting their losses, their equity curve. So in this case, this is a $1,700 account that has lost $21,000 or 92% in 3 months, right? This is horrible. This is gut-wrenching, right? But what's happened is there is this badge of honor now for essentially losing money on Wall Street Bets. This is seen as, you know, something that gets that, like this post probably had 1,000 upvotes or more, right? It was all, you know, essentially the rage. And you have more of them, like this one here is a screenshot of someone with $25,000 equity, which is a large account, but its total return is down $144,000. So down 85% and well into a 6-figure loss. Now, this is sad to see. This is horrible, but this gets a tremendous amount of upvotes, and it's almost like a reframing of it's a good thing to lose a lot of money. And so this is something where I am 100% against it. Because it just makes no sense, right? And it is really sad underneath the hood to realize and to understand that there are people that have really suffered this type of loss. And this is, again, just not something that's healthy for any individual to sort of experience. So to me, this is where I sort of draw the line and say, you need to separate the sort of meme stock investing, which I can actually sympathize with and get behind, but it's doing it responsibly with position size, right? So the fact is when you read a lot of Wall Street Bets and Discord channels, they are all in. It's just all in, 100% chips into the middle of the table. Let's you know, go to the moon and just make a killing. And that is not the way markets or trading works. It is a probability game that has lots of uncertainty behind it, and you cannot be all in. The number one rule of Wall Street here, or to trade, is to essentially not lose all of your chips. You have to stay in the game because you have to be able to take the next trade. And so if you are a new trader, one of the articles that we have on our website is how to position size when swing trading, right? And this article goes through lots of different ways to think about how much position size you should be allocating, you should be investing in a single trade or idea. There's so many different articles like this. So there's all kinds out there that you can read. We have one, we'll link it up here. But basically, when you're thinking about, you know, going on to Wall Street Bets to see what the next idea is, or to see where people are starting to talk about, don't even, you know, first off is options is a problem in itself, right? The fact that not only are people going all in on trades, but they're going all in on options trades. So you're taking this extreme amount of leverage in a directional call bet, which is a very tough proposition in general, is to just buy calls straight up or buy puts straight up, especially most people are going out of the money. It's a absolute recipe for disaster. Yes, it is a way to make a lot of money, but it is a great way to lose a lot of money consistently. So my advice is don't touch options unless you're actually going to use them to invest a very small amount of your account, because options are designed to sort of manage risk and to limit risk, but only if you actually use them for that purpose. You can't use them for leverage. So I would say for 99% of people that are starting out, don't activate options on your Robinhood account or your broker. Stick with stock and at least just stick with stock. Don't use the leverage of options. And then think about your position size in the trade. I don't want to go into all of the details around position sizing. You can read this article. You can also take a look at our position size calculator on our website. It's $25. Probably be the best $25 you can spend, because you can easily just kind of put in your parameters here and it'll spit out how many shares you should basically purchase based on your risk tolerances, based on your account, all of that stuff. So it is very important. It is my number one issue with meme stock trading, is that meme stock trading is synonymous with going all in and trying to hit huge home runs. And I think if you are going to trade these meme stocks, you can do it, but just do it with the appropriate amount of size. Because let's say, for instance, and I'll wrap this point up here, there are, 40 memes, big meme stock trends that are going to develop here in the next 3 years or so. Maybe the next two aren't going to go anywhere, but maybe number 9 and 14 are. And so if you run out of money before you can hit those, get to number 9 and 14, you're going to be out of luck and you're going to miss the opportunity. So think about position size. That is absolutely a critical part to trading in a more professional way. All right, now the second piece of advice I have for newer traders that are coming in here. So position size is number one. Number two is having an exit point in general. Okay, so I've got a chart of GameStop up here, and basically there's lots of ways we can think about this type of problem, and I'm going to just leave some resources because I don't want to turn this into a very, very long strategy development sort of lesson. We have other videos on our channel for that. But basically here is, if you are going to be investing in meme stocks, I think the way you want to think about it is you want to participate when the times are good, right? When things are going up and it's heading in the right direction and it's getting momentum to the upside, that is the good times. That is where you want to essentially be involved and be invested. But when the music stops and when the stock ends up pulling back and when prices start to come down, that is where you want to be very cautious, careful, and you want to be thinking about exiting that position, because you do not want to be the last person at the party, kind of sitting there while everyone else has left and price has collapsed on you. So one way you can do this is by using moving averages, and I have a guide, so we'll link up a guide on how to use moving averages and what they are. But basically, these two lines you see on the charts here, so this is a year-to-date chart of GameStop, and you can see this orange line and this blue line is a 10 exponential and a 50 exponential moving average. And so what this is essentially doing is it's just looking at the past values of price, and it is creating an average from the past values of price. And a way you can think about investing is essentially staying long the stock while it's above the moving average, and you exit the stock when it falls below the moving average, because it's a way of essentially measuring trend and momentum, and you want to be involved during those good times. So let's take the hypothetical example. Let's just say you were invested in GameStop at the start of 2021. So price was trading around $17. It got all the way up to almost $500, which is incredible. $484 was its high price on January 28th. And then it had this ferocious 91% pullback over the next 4 weeks. So what you don't want to do is ride all the way up and then ride it all the way back down. You want to be able to realize some of those gains, right? You're investing. Ideally, I think the only reason would be to make some money on the stock. And so you want to be able to capture that upside, and you don't want to give it all back. So if you looked at this orange line, for instance, this here would tell you that, if you were in it at the beginning of the year while it was above the orange line, basically, you would have stayed invested and you would have exited on February the 2nd when price opened at $137. Now, $137 is not $490, so you definitely didn't get the top, but you absolutely saved yourself from, you know, another 50%, 60% drawdown and giving back a lot more of your money, right? And if you looked at this orange line, you could have sold right here at $140, and then you could have rebought this stock around $70 or even as late as $90 when it got back over the orange line, and then caught the next move back up. So you would have been in around $80, $90, $70, depending on where you'd get back in. And then you may have exited back here around $200, right? So this is a form of kind of trend following. It's a very, very simple approach. You can get much more sophisticated. There's lots of more sophisticated ways to essentially determine trend, to stay during the good times and to exit during the bad times. That is a very important part of trading, position size and knowing when to exit. And you can always get back in, right? And you can always get back in. That's something to sort of keep in mind. The third point I want to make is about selling some into strength. Okay. So let's say, for instance, you did have, again, you were a GameStop investor at the start of 2021. You were in it around $18. As this stock goes up, right? Let's say you had, 50 shares at $17. So that is about $1,000, right? You've got 50 shares around 17 bucks. So you've got about $1,000 worth of GameStop, and you start to see this stock run up to $40, $80, $100, $200, $400, and you're holding on to those 50 shares. What a lot of traders, new traders, think is it's a binary decision. You're either all in with those 50 shares or you're all out, right? But you don't actually have to think of it that way. You want to think about scaling some into strength. And this gets into a lot of more advanced topics, but basically it goes something like this. If you've doubled your money or if you've tripled your money in a very short amount of time, sell some, right? Don't sell everything. If you want to continue to let that run and see if you can really go to the moon, but just sell some, take your cost basis out, right? So once your initial $1,000 investment has gone up to $2,000, $3,000 or $4,000, take $500 off the table, right? Take $1,000 off the table. Consider it a free ride. At least you took your initial investment off. You've captured some gains, and now you can just sleep easier at night. You have some money secured. You pulled your original investment out, and you can get ready for the next trade with that $1,000 that you just pulled out of it, right? So there's lots of different ways you can sort of think about scaling into strength, but number one, sort of piece of advice there is to take some off the table when the times are really, really good, because it will just help sort of reduce your anxiety and it'll help you lock in gains. And then if the stock pulls back by a big margin, you could always buy back in at a 30, 40, 50% discount, right? So these three things I think are the most important for the new traders that are trading meme stocks, is to buy the hype, but don't buy the hype, right? You want to essentially, catch the stories here. You're going to be looking at these different channels. You're looking at this social aspect of trading, and that's great and all, but think about position size. Think about trend following in some way, shape, or form, or at least having a point at which you're going to exit. And then think about just selling some into strength. If you really hit that home run and it starts really working in your favor, you want to sort of pay yourself. You want to essentially get your initial risk off the table. Those are three things that I think will make this much more sustainable and sort of a healthy way to kind of level up your trading. So hopefully that is helpful for all of the new traders. There's lots of other ways to think about doing all of those things. We have some other videos on our YouTube channel and on our website, some guides on how to do some of those things. And sort of as we wrap up here, as I sort of put the attention back to the old traders, the old timers here that have been trading for a while, that have certainly realized and respect those three lessons, I think, on risk management and sort of trend following. Let's think about the meme trading craze as something that we could participate in ourselves. For instance, if we are using a list like this ourselves, and you are a more experienced trader and you know these are the stocks that are in the sort of zeitgeist, the conversation, then trading this universe and doing like a momentum trading system and doing it after, consolidations or, technical breakouts or just great chart patterns, there's some great opportunity here because these stocks have the potential to really scream higher in such a short amount of time that as an experienced trader, you can, if, with some timing techniques, you can actually use these stocks to your advantage to essentially really get some high reward to risk payoffs by staying in these names, to maybe responsibly using leverage or options to essentially capture these short bursts of momentum. I think there's some opportunity there, not just to dismiss the names, but to think about the fact that there are potentially millions of eyeballs on these names. And if a chart pattern sets up, that's something that you ought to pay attention to because of the increased odds that it's getting the attention of the world, let's call it, right? And I know that's a little bit grand, but it's sort of a way to think about it. So that's it. That wraps up sort of our video here on meme stock trading. Leave a comment below. I'd love to know what you think about this video, about this topic. Have you been trading any of these stocks? What advice or tips or lessons or stories can you share for others to learn from? Leave a comment below. I'd love to read it. We've got sort of the 3 rules or practical advice for the newer traders in this video. And then for the older traders, let's say, will hopefully come away with this video thinking not to totally dismiss this new style of investing because it does look like it might be here to stay for some time. So that's it. Please leave a comment. If you enjoyed the video, give it a thumbs up and subscribe to our channel for a lot more just like this. Have a great day and we'll see you in the next video update.